We are 2 days into the new trading year, and once again, we have futures lower. We're looking at the SPY down about 0.5%. That is after a red day yesterday. The expected moves, the 0DTE expected moves, have been about 0.4, 0.5%. That's what we've got today. So it's already down, if not past the expected move for the day. So that shows you a little bit of that volatility might start picking up here a little bit if we keep seeing these kinds of opens. Yesterday was even more drastic, especially with the Qs, where they opened down more than 1%. So keep an eye on 0DTE expected moves and watch for them to start to expand. You might see them at 0.6, 0.7% expected moves if this continues and we keep seeing opens that are sort of beyond what options we're pricing. As far as the market itself, this is not a ton of information to go on. Opening the year with 2 straight down days, there was obviously this massive run up into year end, and there might have been some profit taking that got delayed into the new year for whatever reason, including tax reasons and things like that. As far as what it portends for 2024, you will hear a lot of people saying how the market starts off is how the year will be. There is no statistical significance to that. That is a bit of a farmer's almanac type thing you hear in the market a lot. What it could be signaling is a change in trading. And what we saw was extremely low volatility going into year end. We saw a slow creep higher with these little staircase steps where it would go sideways for a week or a week and a half and then continue higher. If this volatility were to continue and we were to drop lower than this level right here that we're looking at in the chart, then you will see vol pick up. You could see a pullback that a lot of traders have been sort of expecting or waiting for. That is possible, or it could shake out some sellers at the beginning of the year. Some people that maybe had delayed selling could get them out of there before it continues higher, which is often a way that a market gets higher, is it shakes people out with the threat of a sell-off. So we will see, and volatility really isn't popping that much yet. You would need to see probably about 3 straight days of red days, or you would need to see some sort of acceleration. So if yesterday was down about 0.75%, you would be looking to see a 1+% move lower in SPY, or if you saw Qs really get going and having more than 2% moves lower, that's when you're going to start to see vol pop. As far as individual stocks, keep an eye on some of these mega caps. Here we have Apple sort of formed that double top right here recently, and it is pulling back. Where that goes next is probably pretty indicative of what the SPY and the Qs are about to do. We've got an expected move of back to those highs. The market isn't really pricing that until really March, which is kind of incredible. And of course, we have earnings coming in here. But this again shows you how much this is 22 vol out there. Near term in Apple, we're at 19 vol. So this just goes to show you how low the volatility is in some of these stocks. If you go out to May, we're at 23 vol. These sorts of expected moves, 10%. If you go back into the recent history, Apple rallied 10%, or it's up 10% from its lows, but it's also down 7% from its highs right here. So the options market is still not pricing much volatility. So if you were to see this continuation of a sell-off in a stock like Apple, watch for this vol to really pick up and people start to get a little bit worried going into these earnings season. Keep an eye on, of course, is small caps. And let's just zoom out a little bit here with IWM. You saw this attempted breakout of this weird range that IWM has been in for the last year or so. It is pulling back, and right now, pre-market, we are at 197 pre-market, down about 1.4%. So that's a pretty significant move in IWM, more than the rest of the indices. There are some, yields are up slightly, or at least probably from a market perspective, they look like they've stopped going down, treasury yields. That starts to change the story a little bit in small caps, especially small caps that have a lot of exposure to interest rates. There's a couple of stocks down pre-market, like SOFI. In IWM itself, we were getting to the point now, even pre-market, where the expected move for the week was really only taking you down to about 196. And so we are almost there pre-market in IWM. So keep an eye on that, because that would be a significant breakdown right here. If you look on back into 2023, yeah, you've got about a 196 level down to the downside on this flag that was forming. So if it were to break down below that, that would be significant, and you would see vol start to quickly pick up, and obviously you've got this big gap higher. So keep an eye on that. Or if it does not do that and it sort of settles and bounces back to 200, then really nothing has changed. So that's the kind of thing that you should be looking for as a trader, and especially as an options trader, and especially as an options trader that's maybe selling moves. And then obviously as an options trader that is looking to buy puts or buy put spreads for a pullback in any of these indices, these are kind of your really significant levels where not only would you get the move lower delta-wise, but you'd probably see a pop in IV and Vega, which would also help those kinds of strategies.